Well, let's put the focus then on a Justdial as well. They posted a stable set of first quarter numbers, a marginal increase coming in the profit figure, and a 10% jump is what we saw as far as the EBITDA margins go. Let's bring in Abhishek Bansal, the CFO at the company, for more perspective on the quarter gone by. Abhishek, good to have you on. It's been a good quarter for the company. Take us through what's worked for you this time around.
Yes, definitely. This was a very great quarter for us. Firstly, on the user side, we had about 25% year-on-year growth in our user base. Despite a higher base of 100 million users, this particular quarter we clocked about 125 million unique users. Over last 8 quarters, we have added about 50 million users from a base of 75 million users 2 years back. So that is a very healthy sign. Post-user growth, obviously the next key metric is monetization. The revenue growth, which has been on an upward trajectory. We had about 11.3% year-on-year growth in revenue. And over last 3 or 4 quarters, whatever tight cost controls, optimizations that we have been done in our cost structure, that is playing out. As a result of which, EBITDA on an absolute basis grew about 77% year-on-year. So all the 3 key metrics that we track, user growth, revenue growth, and margins, I think all 3 were on track this particular quarter.
All right, this time around, the kind of growth that we saw in your ad campaigns and your realizations clearly has been what's aided your revenue growth. Do you expect this trend to continue?
For this particular quarter, out of 11.3% year-on-year growth, about 4% came due to campaign growth, and the rest, about 7%, came due to year-on-year realization growth. For the full year, as we have mentioned in the past, whatever mid-teens growth that we are targeting, I think partly it will be a function of realization growth and partly should come out of campaign growth.
All right, the other metric that caught my eye was the number of unique visitors that has crossed the 125 million mark quarterly. What is the sort of target that you're working with if we talk about the second quarter and then fiscal 19?
See, the target on users obviously is that we want to maintain that 25% plus year-on-year growth rate despite base getting higher and higher. So for the full year, if we are able to maintain that, we would be pretty happy. And possibly we would want user growth to multiply even further.
All right, in terms of the unique visitors share then, the share of mobile visitors has been increasing every quarter consecutively. Do you think that has peaked out at the current level, or do you think that we can continue to see this trend continue?
That trend I expect to continue. So mobile today contributes about 74%, which was about 50%, 52% or so 2 years back. So considering smartphones are becoming cheaper, data tariffs are quite attractive, the usage on mobile obviously is increasing day by day. Mobile traffic definitely is expected to continue to gain share even going forward.
All right, in terms of expansion then, firstly, let me get your take on how the recently acquired services, how have they performed in the quarter gone by, and any new initiatives that you have planned?
See, on the product side, a couple of key initiatives that we took. We released our mobile site somewhere in May. The new design of the mobile site is taken very well by users, especially on the speed. The page load time has dropped by about 40%. Then we also released our new iOS app just about a week ago. The new design is much sleeker, which I think will be taken very well by the users. The same design we intend to roll out on our mobile site as well as our Android app very shortly. So the new iOS app, if you see, it is also loaded with certain new features such as a lot of curated content. There's a chat messenger to connect SMEs and users. So all these particular features as well as the design upgrades, they are underway.
All right, so that's the word as far as the expansion plans go. The buyback is something that's providing quite a bit of comfort in terms of cash utilization. And of course, this coming 1 year post the last buyback that had been announced. Give us a sense of what the rationale is here. Will this be a form you think that is suitable to return cash to shareholders?
Yes, the buyback, clearly the idea is that whatever free cash flows that the business is generating, in absence of any inorganic opportunities, it is better to return it back to shareholders. So this particular buyback will be of the size of about 220 crores and it should take anywhere around 3 months to get concluded. And this particular buyback will be via tender offer route.
All right. And what is the cash on the books at the moment? Anything that you're looking to utilize as far as acquisitions go? And if yes, then how much can we expect to see in fiscal 19? What would be the ticket size?
See, currently the cash and investments on books stands at around 1,288 crores. We have been very clear over the past several years that we would want to look at any acquisition opportunities basis merit, whether such acquisition would have synergies with a horizontal player like us, what is the value at which we acquire any such particular business or opportunity. But there aren't any such opportunities that might have synergies with us. So that is one of the reasons that we said that, okay, let us return a good portion of this particular free cash flow back to shareholders.
All right. If we talk about ad spends, then what is the outlook for FY19? Because they've been in the range of about 4 to 5% of your revenues. Do you expect that you might have to spend more, especially since, you know, the sort of download trends we've been seeing are on the decline?
See, yes, for this particular quarter, it was around 5% of the top line. For a full year basis, we would want to spend 8 to 9% of the top line on advertising to grow our user base, to have more and more user engagement. Advertising tends to be lumpy in quarters where you have a huge mass media campaign or any other promotional campaign. So for a full year, definitely we are looking to spend more than what we spent last year. And the same could materialize in remaining 3 quarters.
All right, give us a sense then what that means for your cost optimization, because you have been doing that for some time. Can we expect that to continue? And if yes, then what is the sort of benefit that you're expecting on the margins? Overall, what kind of margins can we factor in for fiscal 19?
This particular quarter, we had about 29.5% adjusted EBITDA margin. Obviously, margin was slightly on the higher side considering ad spends were lower. On a recurring basis, definitely 25-26% seems sustainable considering the cost optimizations that we have brought in. On the other hand, we do have inherent operating leverage as well in the business, which could result into margin expansion as well from 25-26% levels.
All right, just a last question then, Abhishek, before we let you go. Overall, if we talk about fiscal 19, yes, there do seem to be some challenges in terms of a constantly changing business environment. But what are the overall growth drivers that you have that you think will kind of support the growth in fiscal 19? And overall, what's your outlook?
See, for FY19, 3 key initiatives or 3 key metrics that we would internally focus on. First, obviously, being the user growth, which we would want that it should be north of 20-25%. On the revenue growth, it's something around mid-teens is what we are targeting for the full year. And last couple of quarters gives us adequate confidence that we are on track. And then on the profitability side, we are very clear that whatever incremental revenues that we get, they should be at decent to healthy margins. So I think on all 3 parameters, we seem to be pretty much on track.
All right, we'll leave it at that. Thanks so much for joining in. That's Abhishek Bansal of Justdial taking us through their first quarter numbers. In fact, a good quarter coming in, a revenue uptick of about over 11% for the quarter. EBITDA as well seeing a jump of 76.7% in the quarter gone by. So that is a Justdial for you. But with that, we'll wrap it up here on this edition of Trending Today. Thank you so much for watching.